What's in a name? Clearly plenty of money in this case. The fund under the scanner this time around is the Kotak 30 fund. But don't let the name mislead you. This is neither an index fund nor is it limited by the constituents of the Sensex. While the number of stocks generally fluctuates between 30 and 39, there have been instances where it has fallen to less than 30. While there might be a risk in limiting your portfolio to just 30 stocks, that risk is mitigated with a large cap tilt. Moreover, exposure to a single sector rarely exceeds 25% of the portfolio. The fund launched in style only to disappoint in the following 2 years. It picked up in 2002 and has some impressive annual performances. More recently, it ran into rough weather in 2009 after a very average performance in the year 2008. But what's interesting is that its total allocation to FMCG and the healthcare sector, both the defensives, were higher in the year 2009 than the previous year. Let's bring on board the numbers to give you a better idea. If you invested 1,000 rupees in this fund when it launched, you would have 5,676 rupees last year and 9,543 rupees today. But let's not delude you with the pretty picture, because the usual hiccups are prevalent. And we tell you if it's worth investing your money in this fund.
Thank you, Avan. With like Avan was pointing out, a 5-year annualized return of about 20% a year. That's very good from a large cap fund, isn't it?
Yeah, it is. And its initial mandate was to invest in 30 companies only. The portfolio cannot spread beyond that. And it did stick to that particular brief. And as the fund got larger, now it has been expanded to 39. This fund is reasonably focused and has always been a large cap fund. Very consistently.
In your mutual fund yearbook for this year, you recommended this particular fund as a core holding, a core equity holding. But can this be the only fund that I hold? Can it be the only equity fund that's in my portfolio?
This fund is unlikely to give you any surprises. And it should be able to deliver little better return than what you expect from a Nifty or a Sensex. So it has been able to do so on any rolling 5-year period. So if you have that kind of time horizon, you are wanting to get little more return than the benchmark, and you're optimistic about the market and the economy, yes, this could well be.